A Bitcoin jumping back above 50,000 for the first time in a month, nearing 51,000 right now, real close. The increase coming after a brief plunge following fears surrounding regulatory policies in China and the United States. Bitcoin's October comeback comes as other top cryptocurrencies enjoy similar gains as investors continue to pour money into the stocks amid inflation fears. But are cryptos worth your money? Former Federal Deposit Insurance Corporation Chair Sheila Blair joins me now. I get asked this all the time, Sheila. Is crypto worth it? Do I need to get into crypto? What do you say?
Well, I don't give financial advice. I will say, though, I don't own any of it. I think people do confuse the asset with the technology underlying the asset. And the distributed ledger technology, the blockchain, that has real promise to be disruptive and of tremendous value in payments, clearing and settlement, better secure systems for sharing information. There are a whole host of companies developing that technology for uses that will be hugely beneficial to our economy, but don't confuse that with the actual asset like Bitcoin, highly speculative, highly volatile. I stay away from it. I know I'll probably get a lot of adverse reaction to that on Twitter saying that, but I don't own it, and I believe in the technology, but the assets itself, I think you should be very careful about.
Now, the debates on Twitter are big about crypto, and at the same time, though, you are a former regulator. So do you, in your opinion, do you think that crypto should be more regulated or regulated in general?
It should absolutely be more regulated. I fear the regulators are falling behind on this. There's a lot of focus on stable coins, which I celebrate. Stable coins are different from Bitcoin. It's a cryptocurrency, but it's tied to an underlying asset, typically the U.S. dollar, and that's issuers bill it that way. That it's backed by actual U.S. dollar cash equivalents, but that's really not the case with a lot of them. I'm on the board of a company that has a stable coin. It only invests the fiat currency that it takes in true, in FDIC insured deposits or short-term treasuries. But a lot of the other issuers do not do that. I think people buying these stable coins think they're backed by cash equivalents, but they're not. So there's a crying need for that. It's also a rapidly growing market. It's up to about 120 billion now. That's about a tenfold increase over a year. Really going quickly, not huge, not systemic at this point, but could be. And regulators really need, it's just one piece of this larger ecosystem that is a growing force in our markets. And I do fear that regulators have been falling behind and think they need to pick up the pace a bit.
Well, and look, it's not going away. That's obvious. I mean, all the big banks are now in some form or way, shape getting into crypto. I want to switch, though, to another issue here. You recently called for SEC Chairman Gary Gensler to address the risks of stablecoins, but you also want the SEC to find a way to curb payment for order flow. This is kind of that Robin Hood story, if you will. How do they make money? Give investors free trades. How do they make money if the order flow rules kind of change? And I don't want to get too wonky in the weeds about how the banks are communicating with each other, but you don't like how this system is run.
Well, I don't. I think that the costs are probably greater with payment for order flow. They're just less transparent because the firms that are taking the other sides of these transactions are giving lower quality executions. So they're making money off of a wider spread, and then they're giving a little bit of the money to the broker who's sending them the order, and that's how the business model works. And it's not transparent. And I know it's hard to convince people. Listen, you are actually paying for this with the lower quality execution, but that is what's going on. I'm not naive to think we can put this genie back in the bottle. I know people have gotten used to commission-free trading. Payment for order flow, a lot of brokers, that's their whole business model, but there are some brokers who do have commission-free trading and do not pay for order flow. Fidelity is one, so I think it can occur. But look, if they want to do these trades, publish the best price. Draw your order by publishing the best price. Put yourself out there the way exchange market makers have to. Put it out there. Stand behind it. Don't keep your interest secret, pay for an order, and then make a little teeny bit of a price improvement over the public bid ask, and pocket a nice spread. That's what's going on now, and people need to understand that.
Well, Sheila, we have to run, but I want to give you a big shout out. You know, I'm a big fan. You kind of held my hand during the 2008 financial crisis when I was here at Fox. And I want to say, you're writing children's books, and I love this.
Yes.
This is so cool. I just want to show our viewers. We got to run, but I got to show you. Money Tales by Sheila Blair. How great is that? Sheila, it's so great to see you. Thank you for being here.
Nice seeing you. Thanks for having me.
Right.
Bye.